Welcome to Insightful Value, your go-to spot for spotting companies that might be flying under the radar. Today, we're diving into Yakult Honsha, whose stock price has taken a notable dip. Could this be your chance to explore an undervalued gem, or is caution the better call? Just a heads up, this review is for informational and educational purposes only and not financial advice. If you appreciate clear, jargon-free breakdowns, hit that like button and subscribe for more content like this. Yakult Honsha is a Japanese company best known worldwide for its probiotic drinks and health-related products. Founded on a century-old tradition of microbiology, Yakult's core business revolves around promoting digestive health through its fermented milk beverages, along with a range of supplements and skincare products. The company has a strong presence not only in Japan, but also across Asia, the Americas, and Europe, focusing on steady global expansion. From a value investing standpoint, Yakult Honsha shows some compelling traits. The company's revenues hover around 300 billion Japanese yen, supported by consistent demand for its signature probiotic drinks. Their operating margins generally sit in the range of 10 to 15%, reflecting a balance between premium pricing and efficient production. The business model benefits from strong brand loyalty and recurring sales, which helps stabilize cash flow. Recent developments include expansion efforts in new markets and ongoing product innovation, such as new health supplements and wellness products tailored to aging populations. However, the company has faced headwinds from fluctuating raw material costs and some currency exchange impacts, which have affected short-term earnings. Dividends have been relatively stable over the past 5 years, with moderate growth aligning with steady earnings, yielding about 1.5 to 2%, which may appeal to income-focused investors. Key financials show Yakult Honsha holding a healthy balance sheet with manageable debt levels and solid cash reserves. This financial stability provides room for strategic investments and weathering economic uncertainties. However, investors should keep an eye on risks such as intensifying competition in the health and wellness sector, regulatory changes impacting product formulations, and the challenge of maintaining growth in saturated markets. Additionally, global supply chain disruptions remain a potential risk. Why consider investing in Yakult Honsha now? The recent stock price dip might present a chance to get in at a more attractive valuation, especially for those who believe in the long-term trend toward health-conscious consumption and demographic shifts favoring wellness products. The company's global footprint and innovation pipeline could support recovery and growth. On the other hand, the stock price softness reflects valid concerns about near-term margin pressures and external uncertainties. For cautious investors, it's wise to monitor how effectively Yakult manages rising costs and competition before committing fully. The timeline for price recovery depends on global economic factors and how well the company executes its strategic plans. At Insightful Value, we break down complex financial stories into clear, actionable insights. We focus on undervalued companies like Yakult Honsha to help you understand the core value drivers without confusing jargon. Whether you're a seasoned pro or just starting out, our goal is to make investing smarter and simpler. For more insights on Yakult Honsha and other undervalued companies, head over to insightfulvalue.com. If you found this helpful, remember to subscribe and like to keep up with our latest videos.